Hello, hello, hello. Mic test, mic test. Hello, hello, hello. Mic test, mic test. Hello, guys, and welcome to our 136th Trading Opportunities webinar. And let's just get started with a very, very quick introduction, guys. My name is Nirav. I'm the admin and owner of 50 Eyes Market Analysis YouTube channel as well as 50eyes.com website. And coming to you live with the 136th Trading Opportunities webinar at a little bit earlier time than our regular scheduled time. Generally, we conduct these webinars at 2 PM GMT, but today we are about 2.5 earlier, roughly speaking. Right. So, in case you are watching us live or watching it as a recording, you can join in live in the coming weeks, and these are the expected timings. Right. So a little bit about this webinar series. What we do is we discuss the major markets: crude oil, gold, S&P 500, and Nifty. We used to cover Bitcoin till now, but I will reduce the coverage for it and only cover it when there is something important going on. Right. The way we will proceed is we discuss all these charts, and once the discussion is over, if you have any doubts or questions, you can just type that in the live chat, and this will be the sequence of discussion of each instrument. All these webinars are, of course, present on our YouTube channel because that's where we are conducting the webinar live, as well as embedded on our website 50eyes.com. A little bit more about my work. If you are interested in learning how to use Elliott Wave, which is the methodology which I use for analyzing and trading the markets, then you can just head over to the website and check out the video course, Complete Guide to Professional Trading with the Elliott Wave. It has already 1600 plus students. And also, if you are not interested in fully investing in the course, there is a free version of the course available, for which the link will scroll on the screen about now. You can visit that link and check out the 13 free videos, and no registration is required for that. You can also check out my book, Think with the Markets. It's available on Amazon Kindle electronic delivery platform. And lastly, here is our track record for the so many years that we have been conducting these webinars. You can see 2016. The spreadsheets generally do take a little bit of time before showing up. So basically, you can see the record stands for 6 consecutive years, and you can verify anything by going through the spreadsheet and just check what we said and what happened. Right, everything has been what you call back checked. Right, so the reason for showing off is this is above industry standards, and we have had it for 6+ years. Right. That being said, lastly, if you are interested in getting the coverage live, you can always go to the contact us page and request details for Slack private group, which is our private group where I post my analysis and trades live for you guys. Right. That's about it for the introduction, and now let's head over to our charts. So first of all, we'll look over at the chart of Euro USD, check out what was being said in the last webinar and see how things have progressed. So this is the recording from the 135th webinar, which was conducted on 4th of this month. And the idea was that the market is in a sideways correction probably. And this boxed range was the big range the price can move into. I do remember we had some longs which did not work out and were closed last week on Euro because of this analysis. So far, the market has progressed with that analysis. I think we are having some levels of play here. You can check that later if you want, but I just wanted to give you a rough outlook of what we discussed. So here is the live chart, and the main thing is that the market is still within this corrective play. Let me just show you W, and then we are heading for an X. Let me just draw it out so that everything is easy. So this is the bearish count we have right now on screen. W up and ABC for correction sideways, and then we expect another leg in the other directions for this counter. It's the euro chart. So basically, the main possibility, or let's call it H1, remains that the market can go and continue much lower because the wave C leg down is still in progress. That's what you call the bearish count. Second possibility we have is the fact that it is possible that the wave B is still continuing. Wave Bs are known to be complex, and sometimes they take out the last highs to trigger false breakout longs and trap some traders there. So that is an obvious behavior. So long story short is we have H2 suggesting the possibility that this market can also head lower. Right now, these are both counter possibilities, like H1 is suggesting bullish movement, H2 is suggesting bearish movement. So the resultant here is very simple. It is that we want to see a clear break for longs. That is, we want to see the market above 1.117 at least. Keep in mind, we are using this data feed. If you are using another data feed, the price levels will vary a little bit. So anyways, the idea is very simple. We want to see the market go over 1.117 if we are looking for longs. And for short side, we do not have a confirmation, though I can take some minor intraday shorts and so on and so forth below 1.088. But as I said, this is not a positional setup, so I will not comment too much on the short side, although the possibility is really strong there. One thing we can say is for the short side, we expect that even if the market goes down, we can see a correction before the fall. So that's about it for our take on our quick take on euro. Without taking any more further time, let's just switch to our chart of or not the chart. Let's just check what was being said about the crude oil chart in the last webinar. So here we are with the recording of crude oil from our last webinar, and let's just forward it to a point in time where we can draw some definite conclusions. Yes, so here we were expecting a wave 4 in play, right? Double bracketed wave 4, we were expecting price to take support around 73.85 and then continue in the other direction. And yeah, 73.85 was the support. It should hold on the downside if we are looking for longs. I don't think we have any other view discussed. Right, so we'll leave it here and now let's move. And yeah, this was the second idea. If the market does not take the support at 73.85, then it can lead to bearish consequences, or basically sell side trades will be looked out for. So that was the main theme we discussed on crude oil. Let's just head over to the live chart now. So let's see where that 73.85 actually is. 73.85 is roughly here. And as you can see, the market, since our discussion on 4th, where is 4th October? Here. So the market did take support over 23.6, went up, and so that 73 is useless. Let me just check the other level as well. $74.6 after 4th. So here is 4th, and here's the support at not roughly, yeah, roughly near 74.6. Market did take support at our marked level, went up as per our analysis, and then has gone lower. So this is for those who were attending the live webinar. The market did work out in our favor on the chart of crude oil, and not just in our favor, literally took the support at the marked levels and then followed through precisely as per analysis. Right. So that's about it for crude oil's last week's discussion. A +1 on crude oil. Those who were live with us and saw the whole trade setup, it would be nice to see you guys commenting later on in the comment section, because we are going live at an odd time and I don't think too many people will be able to join this live webinar. Right. And let's discuss the scenario now. So now the scenario is So yeah, as I was saying, now the scenario is that from this point of reference around the price level of 65.61, we are seeing a series of legs in the upward direction, which can be taken as either an impulsive continuation or a corrective three-wave structure in the upward direction. In both cases, the minimum expectation is three legs, and that has already been completed. Actually, not in both cases. In the case of correction, it is three legs, and that has already been completed. We already have one or A up, two or B down, and either the C is complete or we are seeing a nested formation. So what do we do? What's the plan in this case is we can think of this as our point of reference for now. And from here on, what we do have is a wave one down, sorry, A down, B up, and possibly C down. So this is the zigzag formation in play. A down, B up, C down. So the first leg down is called the A, correction up is called the B, and the next leg down is called the C, right? If that is the play currently going on, and nice to see you at here. Good evening to you. So as I was saying, if that is the case, which is playing out here, then we are still bound to see this leg down, which should take this market lower than the last low of 72.10, right? And we already are seeing the market reversing near the marked white support resistance level, I mean, right? So short play is something I will look out for below the price level of 74.12, right? Keep in mind the price levels I discuss are based on this data feed. If you are using a different data feed, it will be a little bit different, right? So this is our main play, or this is my main play for the time being, to look for shorts, look for, not directly take them below this level. However, if that does not work out, or I mean, what we do here is analyze all possible scenarios. So the second scenario which I'm seeing is the possibility of this being already complete for the wave two, right? The zigzag already complete here. Let me draw it with a different color. Zigzag already complete here, and this market will just take off from here, which is rather simple. You just look for breakout longs, let's say anything above 78.2, you can we can consider as a possible long trading opportunity. So above this level, we look for longs, right? And below this level, we look for shorts. Simple enough. The two possible scenarios I've already discussed. This is a zigzag. Let's call this over H1, and H2 is straight off up. Zigzag H1 is suggesting downside, H2 is suggesting upside. We have marked levels, and keep in mind the levels here are analytical levels. These are not levels to just jump out and take the trades. Although I think for the upside, that may even work as a level for direct entry, but that remains to be seen. That's about it for our analysis. I think we have a smaller audience, but at least a few people in the live chat. If you guys are able to listen to me fine, see the screen, and able to understand whatever we are discussing, do let me know in the live chat, obviously. With that being said, let's now head over to our discussion on the chart of gold. So here is the recording from our last webinar. Let's see what was being discussed here. So we had two scenarios on gold. One scenario was that this market from at the mark at that time the level was around 2650. The H1 was that the market will go lower to 2626 and 2600s. Let's mark it. So these were the downside support levels, and from those levels, after going lower to these levels, then the market can take off. That was our H1. And I believe the H2 was that the market can straight off take off from here. That was basically the second possibility, or the lesser likely scenario. That was the case when we discussed this market live on 4th of October. Now let's have a look at the live chart, which is on screen in front of you now. So let's go to 4th of October first. 4th of October is here. So as you can see, from 4th of October, the market did go lower to 2626, and then 2600. Yes, it literally went to 2600. So again, it went lower as per expectation. One second. And in both cases, now I can see that crude oil as well as gold, we saw the reversals and the breach of levels on the marked or mentioned price levels. So these two analyses have played out on point, literally, right? So I'm not gonna give wait for anything. Market can go anywhere. I'm not sure what you mean wait for CPI. We are doing live analysis here. Right. Yeah, now let's head over to our current take. So the current take, the situation is not exceptionally clear, although I am a little bit biased towards the bull side. But then again, I have been a little bit biased towards the bull side for quite some time, and it has given us literally exceptionally good trades. So for the time being, we have a leg down correction and then another leg down. This can be seen as a simple zigzag structure in Elliott Wave terminologies. As you can see on the right hand side, we can call the leg down as A, up as B, and down for C. And as soon as this minimum is complete, what we do get is the completion of the correction. However, the problem here is we do not have any confirmation for upside. Where is the confirmation? Confirmation is above 2666, right? So if we are waiting for confirmation, we want to see the market take out 2666. Again, that will be just, I should say, not a confirmation, but it will be what you call a simple sign of possible bullishness, right? So above this level, I will consider bullish cases from here, because at this point, two possibilities are possible here. First of all, we have this white count, which we discussed in the last webinar. You can just check out the last webinar if you want to see the bigger picture analysis, because we have done it in quite a bit of detail in the last webinar, right? So as I said in the last webinar, we discussed the whole bigger picture analysis, and the take was that we are in a wave 4 propagation. Now, if the wave 4 is complete here, that's well and good, but we all know wave 4s can be a little bit complex, in which case we can see another leg lower, taking out the 2600 level, which we just checked out, which was our last support. So overall, my bias is bullish. I personally will look for scalp longs as well as long trade setups, right, from the 2666 plus levels. As a matter of fact, even if I see a good enough clear correction and then a breakout setup, then I'll again look for long setups like this. Let me change the color here. So from here on, if something like this happens, I will probably look for long trade setups on the short term as well. But from an overall perspective, these are the two scenarios: wave 4 either complete or continuing as a double zigzag, triple zigzag, or whatever the case may be. We don't have confirmation for it, but if that is the case, this low of 2600 should be taken out, and only then we will be interested in taking or considering short side setups. And talking about bullish outlook, if things do work out, we already have our planned targets 2700, 2710. So that's about it for our quick take on gold. We maintain the bullish bias. We have discussed the important levels, support, and both side plays. And of course, if you missed it, the overall analysis suggests more bullishness than bearishness. With that being said, let's now head over to our S&P chart from the last webinar first, see what was being said, and then we will head over to our current webinar. So here is the understanding from our last webinar on S&P. Let me see. We were expecting support around 5692 or 5636, right? And then some upward movement was expected. Let's see if something else more important was discussed. Yes, there was some other support levels, 5590 to 5540, although I believe that was a less likely scenario because that is not marked by H1. So anyways, you can check the whole analysis in detail. We get the gist of it. We were looking for upside setup and we were thinking of wave 2 in play. Let's look at the actual chart. So last discussion was on 4th of October. 4th of October is here. Since then, the market did not go even lower than 5684, right? Where's fourth, somewhere here. So the market has not really given any downside movement, and our bias of bullishness suggesting that the market will go up has played out like literally as per analysis, right? Although I was trapped in a counter trend trade, I was trying to take this leg as an kind of a zigzag and expecting one more down leg and got caught on this leg, which did not broke the low. So yes, happens sometimes. But coming back to our analysis, what we were expecting were bullishness. So overall, that bullishness has played out, right? Now, what's the take? The take is let me just actually move this one here, or let's leave it there and move this one here. So what's the take here? The take here now is that we are seeing some upside momentum building up. Although that momentum is from a swing perspective, the count is suggesting that either the 2 is complete or that the momentum will continue building because the 2 is under continuation. So let's look at the higher time frame picture. Here is the higher time frame picture. Expectation is this, that the 2 is probably complete here and more upside is to be seen. Secondary view is that the 2 may be just continuing sideways within this range before upside is to be taken out. So long story short, from both perspectives, the swing and short term, we are more biased towards bullish movements. Actually, I should say short term wise, less and more towards swing, because short term wise, we have this big range for the market to play in, right? Within this range, the market can just go up, the market can just go down, and still remain swing perspective wise bullish. Only above the range, that is, if the price establishes itself above 5825, then and then only can we say that we are possibly waiting, or we are possibly seeing a clearer bullish movement, right? So I'm not really interested in waiting that long. Anything above 5806, I'll be taking longs. Actually, I am planning to start building up longs on pullback, though I haven't taken any entry yet on this counter. But that is the general idea, to look for swing perspective longs and less on the scalp side. Scalp only above 5806. I'll be interested short term, very short term intraday scalps to the to the bullish side. That's about it for the take on S&P's 500. We are expecting heavy movement to the upside. Again, keep in mind we are counting this as a wave 1 up and 2 down. So whenever the 3 happens, if this count is correct, it has to be or should be huge. Of course, if this count is correct, being the condition. And with that, I don't think we have much to add here, other than the fact that below 5683 something is completely off, and that would suggest extreme bearishness. In this case, not just a pullback. I personally feel that below this counter, we can say that the market is doing something completely else, and we will have to liquidate any swing longs if we have accumulated such a position by that time. That's about it for my take on S&P's 500, and obviously all the live trades, etc., are posted live in our Slack group. If you are not a member yet, you can request the details by visiting 50is.com and contact us page /contact us and selecting requesting details for Slack private group. Of course, we cover all these markets live, and all these details are posted here, as you can see, chart by chart with commentary, entries, exits, analysis, etc., etc. So, anyways, that's about it for our take on S&P's 500. Before moving to our last chart of Nifty, if you guys are enjoying this content, do not forget to hit the like button. And of course, guys, as I request in every webinar, to reach the right audience and a higher number of participants, we need shares from your end. So Do kindly share it with your friends, colleagues, and whoever else is interested in trading and analysis like this. Right? Your continued support is exceptionally important, and I would highly appreciate if you do your part. With that being said, let's now head over to our last chart of Nifty. Here is last chart of Nifty. Let's very quickly see what was being said in our last webinar, because we want to create a clear consistency of what was being discussed and what's happening in Nifty. As you can see here, we were discussing, let's see, yes, we were discussing a wave 2 in play, and the marked level is around 24,440, right? So around 24,440, actually it is 24,386. We were expecting the market to go till 24,386. And here is the large chart. The market has not yet gone to those levels, but my current count suggests that we are possibly seeing a wave be in play, which can take the market a little bit higher in the ranges of 25,500 to what is this 25,690. Right, so within this range we can see the market go up, but eventually I believe that a downward movement is still not out of the question. So any movement up is only short term, and I will not be interested in taking any bigger position here. Maybe perhaps some short term long plays, but nothing more than that. Right, other than that, I'm really interested in taking short plays below 24,812. Right, shorts below 24,812 is my main theme here, and there are some sector specific themes which have emerged. Quite specifically, we have some exceptionally good trades in pharma sector, specifically Davis Lab, which we have covered. I think 8% plus movement we caught in Davis Lab. This was all posted live in our private Slack group, and yeah, there it is. You can look at that here. So this chart was posted here when the price was around 5,500. We posted the longs, and then it has gone to 6,000 plus levels. So this is all discussed and posted. Yeah, there it is. The long setup when the market was around 5,500, 55, 55, right? So again, all these trade setups and more similar like these, if you're interested, contact us for the Slack private group. With that being said, I have to leave today. That's why I did the webinar earlier. So kindly share the content if you enjoyed it, and I'll see you guys in the next one. Take care and bye.